Good morning, everyone, and welcome to NYSC TV Live. I'm Kristen Scholler, coming to you from high above the trading floor right here at the New York Stock Exchange. Well, the exchange's celebration of the UN General Assembly Week continues today with the President of the European Commission, Ursula von der Leyen, ringing the opening bell and set to kick off today's equity action. Here's what we have on tap over this next hour. Well, in just a few moments, we'll break down some fresh housing data out this week. We have several major data points that we'll be covering. Lawrence Yun, the chief economist for the National Association of Realtors, is going to tell me what the Fed's latest rate cut means for potential buyers. And at 9:30 a.m. Eastern, that's when the market opens, we'll take you live to Ursula von der Leyen's ringing of the opening bell. She becomes the latest significant figure to ring the bell as part of the UN General Assembly this week, with the presidents of Argentina and South Africa, as well as the U.S. Energy Secretary Jennifer Granholm, also doing the honors earlier this week. And with the EU in focus this morning, I'll be joined by Wedbush Securities' Dan Ives, a well-known figure down here at 11 Wall Street, about the EU's ongoing regulatory battle with big U.S. tech companies and what the Digital Markets Act will ultimately mean. Well, this morning's bell ringer is playing a major role when it comes to establishing policy across Europe. Ursula von der Leyen is a German politician serving as the 13th president of the European Commission since 2019. She served in the German federal government between 2005 and 2019, holding positions in Angela Merkel's cabinet, most recently as Federal Minister of Defense. She was re-elected to head the Commission in July of 2024. And the European Commission says its mission is to promote the general interest of the EU by proposing and enforcing legislation, as well as by implementing policies. Well, the EU's politically independent executive arm was founded in 1958, and it is responsible for things like proposing new laws, meaning protecting the interests of the EU and its citizens on issues that can't be dealt with effectively at the national level, managing policy, allocating funding, and representing the EU internationally, which can include negotiating international agreements for the 27 countries that collectively make up the European Union. Well, the EU, similar to the U.S., has been making efforts to tame inflation coming out of the coronavirus pandemic and ultra-low interest rates. Just last week, the U.S. Federal Reserve slashed our interest rates by 50 basis points, or half of a percentage point, and that move is impacting the housing market. Now, according to the latest data from the stock exchange's parent company, Intercontinental Exchange, or ICE for short, the average 30-year fixed mortgage rate is now fallen to just a bit over 6%. So joining me now to break down what we are seeing in the housing market is Lawrence Yun. He's the chief economist for the National Association of Realtors. Lawrence, it's great to have you on the show this morning, and we've got a plethora of housing data out this week. But with the Fed cutting rates by that half of a percentage point last week, how does that impact housing affordability?
Good morning, Kristen. Certainly, the housing affordability had been hit early part of this year, late last year, because of high interest rates. Interest rates are the dominant factor for the affordability. So the fact that mortgage rate is now 6.1%, as you alluded to, and it was up to 8%. So this is already a 200 basis point decline, even as the Fed made its first cut. So the bond market, mortgage market already incorporated what the Fed will be doing. This is a great news for home buyers, great news for housing market revival, especially the sluggish existing home sales market, which has yet to recover, but the new home construction market has already begun to see positive gains.
So the NYSE's parent company, as I referenced earlier, Intercontinental Exchange, now estimates that the 30-year fixed mortgage rate will fall to 5.8% by March, about 6 months out from 6.1% earlier this week. How do you anticipate that could impact demand coming from buyers?
Anytime we see a 100 basis point drop in mortgage rate, that induces about 300,000 additional home sales, roughly speaking, 5 to 7% boost to home sales. So the mortgage rate declining. Now, the further decline from current level is more minimal, so going from 6.1 to maybe 5.8% forecast rate that you alluded to. That is a more milder decline, but the big declines has already occurred. So even as the Federal Reserve cuts interest rate for multiple rounds additionally, which the Federal Reserve does not directly control mortgage rate, they control the short-term Fed funds rate, but the mortgage rate declining, that is certainly a positive. I think we have to still wait until 2026 to see home sales back up to pre-COVID 2019 condition. But the worst condition, worst in the home sales activity is already over. For homeowners, they have consistently seen record high home prices because of the housing shortage.
I mentioned the plethora of housing data that we'll be getting this week, Lawrence, and we are awaiting today new home sales data for the month of August. Are you seeing buyers still turning to new home sales due to tight inventory of the existing home market?
Absolutely. The home buyers are not necessarily seeking out a newly constructed home. They're just looking for a home. They just want to go from one home to the next that better fits their lifestyle. And the inventory situation for the newly constructed units are readily available. The month supply situation is about 7 to 8 months, plentiful supply in the new home construction. While on the existing home, which is a larger market share, 80, 90% of the market, inventory has been short. But good news is that recently we are beginning to see rise in existing home inventory. So right now, the consumers are looking at newly constructed home. But I think as more existing home comes onto the market, they will look at all broad choices.
Quantify the inventory levels for existing homes out there right now for people who are watching and perhaps interested in buying.
There are 1.3 million homes on the market in the US, 1.3. Last year, it was about 1 million. So it is an increase and certainly a welcome increase for consumers with more options. But compared to pre-COVID, when it was nearly 2 million, we're still short on inventory, which is the reason why, given the supply and demand dynamics, not enough supply, well, home prices may continue to march to new record highs.
When we look across the country, are there certain markets, Lawrence, that you see opportunities in right now?
You know, I really like the Florida market because Florida has seen a sizable increase in inventory. At the same time, they are seeing continuing new residents move in. Job creation is very strong in Florida. So, generally the South region, anywhere from Carolinas, Georgia to the state of Texas, but Florida is showing some interesting dynamics. The Midwest is the most affordable. So if people are seeking the affordability, go to Indianapolis, Kansas City, Cincinnati. These are the affordable markets.
Lawrence, very quickly, all in, of course, there's the mortgage rate, there's the home price. What other prices do buyers need to be prepared to pay when purchasing a home?
Well, people need to consider the total aspect of it, but the big influence on a small time frame is really mortgage rate. So given that the mortgage rate had made a substantial decline, I think people who may have been priced out, say 3 months ago, want to retry because their monthly payment is beginning to come down given the lower mortgage rates.
Lawrence, thank you so much for joining us. Again, Lawrence is a chief economist at the National Association of Realtors. And viewers, stay with us. You see the European Union flag behind me. We will see the European Commission president ring the opening bell here in just about 20 minutes time. We will have a lot more coverage after this break.
Roan was really inspired by a conversation I had with my brothers, my brother and my brother-in-law. We felt like at the time there was a big gap in the market for men's performance lifestyle product. There was kind of these active brands trying to make lifestyle product and lifestyle brands trying to make active product. And the only brands that were doing it well were squarely focused on women's. So we felt from a direct distribution standpoint, from a price point standpoint, from a quality standpoint, there was something missing in the market. And we were crazy enough to believe we could go build it.
When did you launch?
2014. So we're in our 10th year, if you can believe it.
10 years. So 10 years later now, you're celebrating today with me your launch of your women's active and lifestyle collection. So why tap into this market and why now?
Well, I think for a very long time we resisted. I mean, from day one, we would have people, every interview, every customer that would come in and would say, when are you going to make something for the women? And two things happened. First, we hired a collection of really talented female executives on our team. And now, if you look at our business, more than half of our executive team, more than half of our leadership team, more than half of our employees are female. They're women, and they would touch the fabrics that we were making. They would see the products, and they were kind of, it was a lot of joking at first, and then when we started to build out the product team that we have now, we knew we could go and do something pretty unique in the market. And then I think the second thing that really drove us and got us excited is, as you know, the brand is a champion of mental fitness and mental health. And we felt like we wouldn't be able to advance that cause just focusing solely on men, that there was an opportunity to include women in that conversation that we got really excited about.
Welcome back to NYSC TV Live. I'm Kristen Scholler. Well, our parent company Intercontinental Exchange boasts a notable presence in Europe, and I spoke with SVP of its futures markets, Tribute Bland. More about it.
So what we do is we provide price transparency to the market. So if you think about things that surround us right now, like coffee, cocoa, sugar, we actually provide the price signals so people can make investments in those products and make business decisions on what to do over the next year, the next 2 years, and sometimes our energy contracts up to the next 10 years.
How are investors able to transact with precision on the futures exchanges?
Sure. So we have electronic markets. That is ICE's innovation. That's what we brought to the futures industry. So we have electronic markets. It's very democratic, and it's actually everywhere. You can just log onto a computer. You can be sitting in Scranton, Pennsylvania. You can log onto one of our exchanges, and you can trade TTF in Amsterdam. You can trade Merban in Abu Dhabi. You can trade mini Brent in Singapore, all from the same screen.
Of course, everyone is looking to the action of central bankers around the world as it relates to interest rates in response to inflation. How is ICE futures exchanges noting that and seeing customer activity change?
Sure. So one of the things that we've been seeing is a huge pickup in our rates complex. Now, our rates complex is primarily in Europe. So we have Euribor, and we have Ester, which is a risk-free rate, and then we have the UK gilt contract. And so last week we saw a record in open interest in Ester, which is the European risk-free rate. People are just trying to figure out exactly what's going to happen with rates.
Talk to me more about how engaging with these markets can provide better liquidity, especially when it comes to risk management.
Sure. So if you're a commercial hedger, a commercial company, like let's just say a major oil company or a major bank, what you need to be able to enter and exit the market is a lot of liquidity. And we try to figure out the right type of traders to provide that liquidity. So you can go in and you're not taxed on the bid or offer price.
Of course, energy markets are synonymous with ICE. Talk to me about how customers can use that and even carbon specifically as a risk management tool.
Sure. So we do a very, very good job of pricing energy globally. So we have contracts in the United States, in Europe, in the Middle East, in Asia. So every benchmark you can possibly think of, we price. The new thing to this is pricing carbon into those energy contracts. What is the carbon cost of producing an X amount of energy? And it's probably to the forefront of the way the energy is going to be priced. And ICE is in the forefront of that with our environmental markets.
Big picture, how does this give investors confidence in their trades?
Sure. So, I mean, we first of all, we have a transparent price. If you look over on the screen that's right behind you, I don't want you to look right now, you can actually see a lot of our prices. So if you look at that price and you say that's the price of Brent right now, you know that that's the price of Brent. That's what the market consensus is for that price.
Mm-hmm. And how does this speak to the futures exchanges, the interconnectivity of markets these days?
Sure. So it's really interesting for us. So right now we have 6 different exchanges. And so we have one in the United States, one in the UK, one in Europe, Abu Dhabi, and Singapore. And we're starting to see interconnectedness between all these products. So for example, last week you could see the price of Henry Hub interacting with the price of TTF. So Henry Hub is the primary pricing point for natural gas in the United States and really the primary energy pricing point for the United States. And you start seeing that interact with the primary energy pricing point for Europe, which is TTF, which is the price of natural gas being imported into Europe. So we're starting to see all of these markets started getting interconnected, and it's absolutely fascinating to see this become like a global price of energy.
What is the technology making all of this possible?
Sure. So we've invested a lot over the past 25 years in technology. We have some of the fastest computers out there. We invest a lot in the way we design the software for it. But the one thing that we do that's key to our exchange is that we actually provide our own front end. So if you have a desktop computer, you can actually download a Java application and trade on ICE, and you can do that anywhere. I've actually heard of people trying to trade from the screen of their Tesla, which is dangerous, but you know.
And what is the role in hedging bets, hedging certain trades in this?
Sure. So what happens is, if you think about this, think if you're a farmer and you don't know what the price of corn, or in our case, cotton, is going to be in a year. A hedge is actually saying, I'm going to go ahead and sell that price right now, sell a futures contract, and try to lock in the price of what cotton is going to be. So if the price of cotton changes and it goes to the roof, I'll be protected. If it goes down, I'll be protected because I've actually hedged that price at that moment in time.
Our thanks to Tribute Bland, of course, SVP of the Futures Exchanges at Intercontinental Exchange. Well, my colleague Trinity Chavez and I were at remarks by the South African president here at the New York Stock Exchange Monday. He also rang the closing bell. But before that, the NYSE president, Lynn Martin, did host a fireside chat in the boardroom, Trinity, which you attended. What were some of the takeaways from the remarks and that fireside chat between Lynn Martin and South Africa's president?
That's right, Kristen. So as you mentioned, President Ramaphosa was here for meetings and to ring the closing bell, and Lynn Martin also conducted a fireside chat with the president where they spoke about the state of the economy, but also how this is a year unlike any other, with global market watching elections across the world. And President Ramaphosa was not an exception to this rule as he successfully secured his next term as president. But he also noted that this is the first year that people of South Africa chose a government of national unity, as Nelson Mandela did in 1994 when he was in office. Let's take a listen.
We've had a history where one party, my party, which has led government since Nelson Mandela's presidency for 30 years. And this year, the people of South Africa felt that they would like to have a government which we dub a government of national unity, where they would put a number of parties together to work together. We didn't get 50% plus one. My party got 40%, and another second party got 21%, and others got other percentages. And we felt, all of us collectively, that this was a clear message from the people of South Africa that we should work together. We should build a government of national unity, largely with a view of engendering growth, ridding our country of poverty and inequality, which are historic.
And the president went on to talk about how he believes political parties should navigate and the importance of working together, especially because until 1994, South Africa was ruled under the apartheid system, a policy of racial segregation enforced by the white minority government. Nelson Mandela, a key leader in the fight against apartheid, he said this.
The world faces enormous challenges and problems, and we have once again found a way of addressing those challenges by working together. We did that in 1994 when our people elected Nelson Mandela to be the very first president. We drafted an interim constitution that directed us to set up a government of national unity. It was time-bound, it came to an end, and over the years, the ANC, which is the main party, continued to have other parties involved in the executive of the country to govern with it. We have now consolidated it on a voluntary basis, believing very firmly that there's a great deal of value in working together rather than in pulling in different directions.
And not only does the president want to lead the way in national unity, but he also talked about how this is a new chapter and how he wants the world to know that Africa is on the move.
We would like the world to see Africa as a continent that is on the move. There are a number of institutions that say that Africa is going to be possibly the second fastest growing part of the world, and we sincerely believe that. Infrastructure development is expanding by leaps and bounds, so Africa is on the move, and I do believe that it is going to be a really good destination for businesses to invest in. A number of your businesses here are already seeing that, and it is a reality that we are on the move.
Now, Kristen, he continued to say how there are so many institutions that say that South Africa is going to be the second fastest growing part of the world and will be a very good destination to invest in. Kristen?
Trinity, how special that we were able to join that, and such a great wrap, really, of his key takeaways there. A pivotal moment, really, on the global stage, and both South Africa's president and, of course, our president here at the Stock Exchange, Lynn Martin, really crystallizing that for us. We're several minutes away from the opening bell, Trinity. In about 15 seconds or so, what is the scene on the ground?
Yeah, so right now the trading floor is filling up. I've been speaking to the traders down here. Looks like the market is pointing flat right now, which is very interesting considering the Dow and the S&P 500 both closed at record highs yesterday. And so I was speaking to them, and they were, a little bit uncertain as to why the market is pointing flat right now. It seems that everybody is waiting for the election cycle to come.
Very important, Trinity. Michael's going to join me in studio soon. Let's take a break.
Joining me today on NYSE Floor Talk is Trina Spear. She is the CEO and co-founder at FIGS. Trina, fantastic to have you here along with nurses. You just rang the opening bell celebrating Nurses Week. So Trina, tell me, how are you celebrating Nurses Week and making it so special?
Okay, so first off, at FIGS, every day is Nurses Week.
Every day is Nurses Week!
And so we're just, this week is really special. Our whole goal being at the New York Stock Exchange is to get the entire financial community, everybody behind our nurses who have dedicated their lives to serving others. And our goal at FIGS is to celebrate, empower, and serve those who serve others. And this week is just another example of that.
For Trina, people who are not familiar with FIGS, tell me what it is you do and the community you serve.
So we are a global healthcare apparel brand, and our whole goal is to improve the lives of healthcare professionals. And so, we started with product. We build the most technical products that help healthcare professionals, that when they're going to work, when they're at work, when they're going from work, head to toe, on shift, off shift, everything that they're doing in their day. And, with comfort, style, functionality, fit, we really aim to serve them in any way we can.
So you mentioned that you started with product. In what ways do you fuse product and marketing to drive excitement around this for healthcare?
Yeah, so right after this, we're going to see billboards in Times Square with all their faces. And so our whole goal there is to inspire the next generation to become healthcare professionals, because if without them, we won't be here. And without these wonderful nurses, society won't be what it is. They're the backbone of any functioning society around the world. And our whole
Welcome back to NYC TV Live. I'm Trinity Chavez, and for those of you who are just tuning in, we are honored to have the President of the EU ringing the opening bell during UNGA Week, a pivotal moment for international collaboration. Now to discuss the significance of how this event and how it reflects the growing importance of global partnerships in the world of business and finance, I am joined by Stefan Jankel. He is the head of international listings for the New York Stock Exchange. Thank you for joining us today.
Good morning, Trinity. My pleasure.
I mean, it's an exciting day, week. We have UNGA. You know, how significant is it to have the President of the EU here at the Stock Exchange on that bell podium to open up the U.S. equity market?
It's a natural fit, actually, and we couldn't be more happy than having Ursula von der Leyen with us. We're on the crossroads of international business. Some people may not know we have 47 countries here represented at the New York Stock Exchange, and the EU, of course, is a large part of that.
And you know, with the EU's strong presence, especially when it comes to their business and their presence here in the United States, talk to me about how you go about fostering these kind of relationships with global leaders.
It's strong and growing. So companies come here to raise capital. But what does that mean? If you peel it back a little bit, it's companies are here to finance their growth, to enter new markets, and with that, ultimately also creating employment. There's significant statistics out there on how significantly employment does get created after a company goes public and raises money in the markets, and with that creates employment and ultimately wealth for those employed by the company, but also those around.
And given the NYSE's stance and position when it comes to global listings, talk to me about how that aligns with the EU's mission.
Again, we are here, including, and today is no exception, this week is no exception, where we are fostering dialogue. We have, with our NYSE listed community of 2,400 companies globally, we have a perfect mix, a perfect cross-section of innovation, of leadership, of employment from across the world, and on occasions like this, actually year-round, but especially during a week like this, we bring companies and influencers and decision makers together.
Now, other than UNGA Week, talk to me about other events that we host here at the New York Stock Exchange to highlight our international listings and those relationships.
Year-round, also on a broader basis, we organize summits, we organize roundtables, including in the regions where we have various client hubs, but also companies come here and use the NYSE for board meetings, for investor days, to present their stories to the investing public. And that's why we are the stage and the enabler to access the US capital markets, actually the largest capital market in the world, but also some, if you think back on some of the history, from across the street where the first president of the US was born in. So New York Stock Exchange and government actually grew up next to each other. And so that all started in the late 1700s, and it goes on until today. And the US markets that it has grown into, especially also earlier this month, we passed a significant milestone of 50 years of the ERISA Act, where tax-enabled, tax-preferred forms of savings that go into equity that have been launched like 2 generations ago, and all fostering the size of the U.S. markets.
A lot of key takeaways. Thank you so much, Stefan. I'll let you enjoy the opening bell.
Yes, thank you. Enjoy.
All right, we're just about about 1 minute out from opening up the U.S. equity markets. I mean, like I said, Kristen, the crowd is really filling up right here as we get ready to open up the markets. And as I said, it looks like everything is pointing flat right now off of those record high closes from the S&P and the Dow that just happened yesterday.
Trinity, it's great to see the action on the floor there. I know the president of the European Commission, we were showing her on the floor of the stock exchange, walking to the trading post earlier. I'm not sure if you had a chance to speak to her, but as we await that opening bell, we're going to see her on that podium in just a few moments. We'll be checking in with Michael afterward, and Trinity, of course, bringing you in as well. And so let's take a listen to the opening bell here at the stock exchange amid the UN General Assembly. We are off to the races here at the New York Stock Exchange on this Wednesday. Stocks officially open, and joining me now is our resident expert. Joining me in studio, Michael Ranking. He's a senior market strategist for the New York Stock Exchange. Michael, great to have you on the program this morning. We are exactly 1 week from that Fed rate decision to cut interest rates by 0.5 percentage point. How is the market taking it?
Yeah, it's been it's been an interesting ride for the last week. As we had talked about, just ahead of that meeting, there were two things that I was really looking for. If the markets did move higher, to see that happen with some authority, right, and some commitment to the strength, and then watching the bond markets. And we did get the move to fresh all-time highs, and we've continued to hold there. We haven't seen a lot of momentum, in that move, but we have seen some commitment to the strength with the S&P 500 holding above 5,700 for the last kind of 4 or 5 sessions. Now, the other thing that we've seen, which I thought was important, was looking at Treasury yields, and we've actually seen the long end of the curve move a little bit higher, which is confusing some folks. But I think what that's telling you is that the bond market has gotten comfortable, with the actions that the Fed has taken. They're buying into that messaging and suggesting that we may not have as deep of a cutting cycle as the Fed's trying to get, kind of ahead of the curve here.
Interesting. And so we see stocks a bit flattish today, but we know September, historically not the best month for stocks, but actually holding up fairly well. This month of September, looking at gains of at least 1% for the major indexes. Has it been better than expected?
Yes, absolutely. So, if you look back, the seasonals, that was something everybody was talking about at the start of the month, right? The seasonal, kind of return profile, that September is historically the worst, kind of month for the S&P 500. It's the only month that does have a negative return profile over history, and it's also been particularly a difficult time period when you look back in election years. So, with negative returns in that September and October timeframe, typically leading to some better returns, following the election when there is some more certainty. Now, we did have a weak start to the month, right? And then, kind of following that jobs data, we have kind of rebounded, right? So you definitely caught some people, a little bit wrong-footed, I would suggest, right? And, one of the things that I was laying out in my note last week was that, from here, right, it seems like that pain trade could actually be to the upside, right? If you think about people have kind of reduced, kind of some exposure heading into the elections, expecting that additional volatility, and as we haven't gotten that, right, you could sort of force, some people back in a little bit earlier if markets continue to hit new highs. I did see one interesting stat from Ryan Dietrich of kind of Carson Group, who highlighted that when markets hit new all-time highs in September, that Q4 does tend to end higher, 19 of the last 21 times, by an average of about 5%.
Michael, good information. Thank you so much for joining. You'll have to join us again as we start the fourth quarter, because a lot to digest, especially in this unique election year. But those stats certainly are helpful. Michael Ranking, we appreciate it.
Thank you.
Well, earlier this month, the New York Stock Exchange listed company MSCI rang the closing bell to celebrate the 55th anniversary of its world and EAFE indexes. With over 100 futures contracts on MSCI indexes available, our parent company, Intercontinental Exchange, enables market participants to gain exposure across a wide range of equity indexes. Trinity Chavez spoke with George Harrington, Global Head of Fixed Income at MSCI, and ICE Futures U.S. President Jen Ilkew about the partnership between the two firms. Take a look.
Our partnership with the Intercontinental Exchange has been absolutely critical in the development of the ecosystem of tradable products around MSCI. So ever since we initially launched the first contracts on ICE around World, EM, EAFE, and other indexes, we've seen a very consistent growth in the open interest. Our end user investors are always looking for exposure management tools, whether it be for risk management, hedging, speculative purposes. It's critical that they have access to these tools, and having a partner that has the global reach that ICE does, with their exchanges here in the United States and Europe, through Asia and into the Middle East, where we're always looking to innovate on new products, has been a cornerstone of the development of our products.
Now, Jen, I want to talk more about these products and this partnership. So ICE and MSCI announced this partnership to introduce a suite of futures products built on a range of MSCI equity indices back in 2009. So talk to me more about how ICE's futures have grown and how customers use this.
Yeah, so we have found a huge amount of interest in these products. So in 2009, open interest had around 60,000 lots, and now we're seeing about 1.5 million lots in open interest. So we've seen a huge amount of success, and that's both over EM, which is emerging markets, and EFA, which is Europe, Australasia, and the Far East. And it's not just the EM and EFA contracts, but there's a huge amount of other MSCI indices we list futures on. The climate contracts, we have a number of climate contracts that we list, and we've seen a huge amount of interest. Even yesterday, we had a record in 3 of the MSCI climate indices. This partnership that we have has, between George and my team and George's team and both ICE and MSCI, has really shown how great us working together can really drive this volume and drive the interest in equity derivatives. And actually we're seeing now with the MSCI contracts in EM and EFA, they are 2 of the top 10 global futures contracts in equity indices that are traded by notional open interest.
All right, thanks to Trinity Chavez for that interview. And stay with us because we'll have much more NYSE TV Live up next.
I was the founder CEO of TrustPath, which was acquired by Zscaler 6 years ago. So I've been running AI machine learning for Zscaler first and then Palo Alto Networks.
Tell me about the biggest trends right now that we're seeing in the cybersecurity sector.
We have the generative AI. We can do, we can make the products a lot more automated. We can label the data. We can come up with the technology to actually identify bad things faster.
According to reports, AI chatbots are going to replace 20 to 30% of customer service agents by 2026. What are your thoughts on this, and how do you see the workforce changing in the near term?
For some use cases, precision is still super important. For instance, if you ask some cybersecurity question, how to configure my VPN or whatnot, you don't want to have an answer that might be hallucinating, right? So for those things, you don't really want to route to the bots to answer. Yeah. But for some of the questions, you want to route to the bots. So I think 20-30% is roughly the right range for the foreseeable future that I think the technology, with the current technology, we have the confidence to say, yeah, we can take care of that. We don't have to worry about the hallucination.
According to a report by Microsoft, another NYSE listed company, Microsoft's 4th work trend index, about 75% of knowledge workers, these are people who work at their desk, well, they're turning to AI to work more efficiently, more effectively. How do you see this changing the workforce?
If you really wanted to get ahead of the curve, you wanted to leverage the technology as much as you can. Yeah. So I would say, sure, 75% sounds right, in reality, but my recommendation, my thought is the number should have been 100%.
Talk to me about where you see the cybersecurity sector, the implementation of AI, where you see this changing the workforce in the near term.
The product can be smarter, right? The product can identify, hey, this is a generative AI bots, identify depending on the policy, I may want to block it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. We are off to the races with stock trading now underway. And joining me now is Dan Ives, Managing Director of Equity Research at Wedbush Securities. Dan, it's great to have you on the show, especially today, because earlier we saw the European Commissioner, Ursula von der Leyen, ring the opening bell. What does her role mean for companies based here in the U.S. that do business abroad in Europe?
Yeah, look, I think it's an interesting time because with the AI revolution and everything we're seeing with big tech getting stronger, clearly, her and as well as the EU is taking a more aggressive stance toward AI and big tech. And I think how this all plays out is going to be very important, especially for tech companies. Europe is a significant piece. So that's going to be a big narrative as we go into 2025.
Mm-hmm. I would be curious to know too, Dan, in terms of her focus when it comes to regulating these large U.S. tech companies, how it might differ. Can you explain that to our viewers between the regulation that they see here in America?
Yeah, I think it's definitely been much more hawkish or stricter than we've seen in the U.S. Now, look, clearly, big tech has a bullseye on its back in the Beltway as well, right? From an antitrust, we've seen some of the DOJ issues. But I think Europe a lot more restrictive. And that's a double-edged sword because even though there's been fines and others, big tech companies, are really starting to maybe, move away from some of the innovation in Europe. And that is going to be the balancing act for the EU going forward, especially when it comes to this AI revolution, which is, moving full steam ahead.
I would be interested to know if we're seeing U.S. regulators really take the lead from the European Commissioner in terms of the actions that she is looking out for companies and notably here consumers.
Yeah, look, I think the bigger issue is that the strong have gotten stronger. And we see that, right? And I think regulatory continues to be well behind the actual technology. And I think it's a concern for U.S. regulators. And we see that from antitrust, the stuff with FTC and Con, as well as DOJ. And this story is not going away. I mean, actually, it's going to become more and more front and center, just given what we see with Mag 7 technology. You look at things like OpenAI, and I think those are going to be the issues that, not just in the EU, but here in the US, that we navigate, just given there's a fourth industrial revolution playing out.
Well, we know that data is so important, and especially protecting consumer data. We've seen a lot of that come out of the European Commission in terms of some of these actions on large technology companies. Dan, as it relates to artificial intelligence, integrity is also a factor in addition to data. But lay out the case here for the layperson, the viewer who's watching, who's wondering perhaps, how am I protected by the European Commission if I am using some of these platforms abroad in Europe?
Yeah, and that's why anyone that goes to Europe, I mean, with GDPR, I mean, you spend 5 minutes checking boxes to get onto a website, right? So that is something that a lot more restrictions from a data privacy perspective. You think about like Google and you look at Meta and any other platform in terms of advertising dollars. Apple, much different, right? Because that's privacy is part of it. They're not selling that data. But look, that's something that European regulators have focused on, but European consumers have to navigate as well. Because, when you look where everything's going, GDPR has been laid out, but the reality is it hasn't really changed the habits of European consumers. That's, I think, right now that conundrum or quagmire that the EU is dealing with.
Interesting. So let's talk about the technology space. I know you follow these stocks very closely as an equity analyst. Dan, are you seeing emerging trends here that are setting up to be winning trends heading into the fall and, of course, year end?
Yeah, I think, look, the AI revolution, we've talked about it's a 1995, almost 1996 moment, not a 1999 dot-com bubble moment. And I think even though this is led by Godfather of AI, Jensen, NVIDIA, as well as Microsoft and others, now it's got the second, third, fourth derivatives playing out. Look at names like Palantir and others. I think that's just a taste of what we're going to see in 2025, where we believe this tech bull market rages on, especially with the Fed, a soft landing and cuts, by 100, 125 bips of cuts on the horizon.
I would be interested to add on that, Dan. We were talking about the markets, of course, after the equity markets opened when we saw Ursula von der Leyen, the European Commissioner, on the opening bell platform here at the stock exchange. But large mega cap technology names really have led the market this summer. Finally, in July, we did start to see a broadening out. Some of these smaller cap names were able to get a bid. I'm curious here how you expect some of these large technology names to perform from a stock perspective now that rates are coming down.
Yeah, I think Mag 7 are up another 15 to 20% over the next 3 to 6 months. I mean, this is just the start of monetization. And despite some of the headwinds that we've seen, I actually think we're on just the next phase of monetization for big cap tech. They continue to lead us higher in that left lane going 90 miles an hour. Some other sectors, right lane going 45 miles an hour, might have the value. The growth is in big tech.
Certainly, we've seen some of that growth. Dan, in terms of what else is on your radar on the global scale, what can you tell us amid the UN General Assembly this week here in Manhattan?
Look, I think right now, and even a number of people from different countries I met with the last day or two, because they're trying to figure out how did they get a piece of the AI revolution? How did they have innovation come to their country? What does it mean for consumers in their countries, whether it's Europe, Asia, Africa? That, I think, is the big focus. You could talk about geopolitical and conflicts and obviously ESG, but I think right now a big focus is how, from an AI revolution, do these companies ultimately start to build out in some of these countries in terms of innovation labs and others to make sure that they're also part of this AI party.
The AI party is very real. We've seen it in terms of interest and topics around artificial intelligence as just a baseline gauge. Dan Ives, we appreciate you joining, of course, from Wedbush Securities. Thank you. Well, do stay with us because we'll have more coverage from the New York Stock Exchange right after this break.
So a lot of technologies in the security operations space, they try to collect as much data as possible, but they don't often have a security orientation or point of view to what they're doing. And so what's different about Exabeam is we're approaching this problem very holistically. We're going to collect data from all the locations that matter to customers, so wherever their users, applications, and data reside, so we can give them the broadest possible picture so that they can effectively detect, investigate, and respond to security incidents.
Earlier this year, Exabeam rolled out new features to address to improve security analyst workflows. Tell me about those new features and what you're rolling out at RSA.
So in February, we released a feature called Threat Center. When we build our products, we think very much about how customers are going to use or interact with the product. So what are the personas? And one of the biggest personas that people who use our product is the investigator. The investigator could be an analyst who's looking at alerts or cases. The whole purpose of Threat Center is to bring that entire experience and workflow into one common place so that all of the data and all of the information that's needed for the investigator is presented and available in a clean and consistent workflow.
Now, is that specifically what you're unveiling at RSA?
We're also going to be introducing a new capability called investigation timelines. And this is building off of something that Exabeam has done since our very beginning, which is the smart timeline concept. So when you're conducting an investigation, one of the most important ways to look at it is in a chronological order. And so we've evolved our smart timelines into a full investigation timeline experience such that anything you can search for, whether it's a user, an asset, a particular IOC, or a device, you can build a chronological timeline around what's happening, when did it happen, what happened before and after it, to make it much easier to understand the behavior or the pattern of what happened.
Welcome back to NYSC TV Live, everyone. I'm Kristen Schuller here in studio. Earlier this year, German Ambassador Andreas Michaelis stopped by the New York Stock Exchange to discuss the deep economic ties that we see between Germany and the United States, the role of technology in future relations, Germany's Indo-Pacific strategy, and the Ukraine Recovery Conference. Here's what he told our Judy Shaw.
Well, I can be very straightforward here. This is the most important economic relationship that Germany has with any partner in the world. And the US has just become Germany's most important trading partner in the world. And in the times where China is was outperforming many countries in terms of exports, in terms of market presence, I think that's a telling story because a couple of months ago, this was still China, but now it is the US.
Now, in what ways do you think partnerships in technology and innovation are going to shape the future economic ties between our two countries?
Now, this cooperation, the cooperation in innovative sectors, in high-tech sectors is absolutely key. Germany has a fantastic research network and a very sound base when it comes to innovative technologies. Sometimes we are not so good when it comes to merging capital and innovation in academia, for instance, but this is an area where we can learn from the US. And our cooperation is thriving. I think it is a very important sector, especially when it comes to AI and modern fusion technologies.
Now, in 2020, Germany released its Indo-Pacific guidelines, which you drafted. So what are these guidelines and what are Germany's main goals in this region?
Well, these guidelines create a special focus on the Indo-Pacific. I think the first message here is Asia policy is not just China policy. We have to look at other partners in the Indo-Pacific region, ASEAN, for instance, but also partners like Australia, like New Zealand, and of course, we have to look at India as a very, very important market for German products and cooperation. That is one. Two, we have not been present in that part of the world in terms of security and defense policy. Now, yesterday, I could say hello and at the same time farewell to two German Navy ships that will now take part, that are on their way into the Pacific and will take part in RIMPAC exercise in Hawaii. So that is kind of new territory for us, but it is also an expression of a clear conviction that we need to be more present in the Indo-Pacific across the board. Economically, business-wise, we have been there for a long time. Now, politically and also security policy-wise, we will also be there.
All right, thanks to Judy Shaw for that interview. And stay with us because we'll have much more after this short commercial break.
So Hungry for More is all about delivering three things: more sales, more stores, and more profits. We've been doing pizza for a long time, 64 years. You can see it's our 20th anniversary on the exchange today. And what we've learned is there are 4 ways to drive those three things. The first is the M for most delicious food. The O stands for operational excellence. You can only promise delicious food if you can deliver it. The R is something everyone's looking for now, which is renowned value. And the E is everything we do is enhanced by our franchisees. So if you look at our strategic pillars, they drive all of our tactics that have led to that great Q2 we just finished.
So now you have New York style pizza. How has that impacted your menu?
When we do innovation at Domino's, we like to think about it as innovation with intent. Don't just come out with a new product while you come out with the product. And so with New York style, what we're doing is reaching a customer who likes a different style crust, a different cheese blend than our regular pizza. And so you're from New York, right? You know, New York style is a little bit more foldable, a little thinner crust. And so that's what we're targeting, this incremental customer. And so far it's been really successful.
What improvements have led to the 10% better delivery times in Q2?
10%, look, we always consider ourselves, we have high standards for ourselves for pizza delivery. And we know we're the best in the business, but we wanted to get better. Because remember, the O in Hungry for More is about operational excellence. And so we've had programs. Last year we called it Summer of Service. This year we're calling them It's More Delicious Operations. And these are programs where we work one-on-one with our franchisees to both help them use our DomOS, which is our operating system, you know, the computers in the store, make sure that links up with the circle of operations. And how can all of that run a little bit better? We sell 1.5 million pizzas every day in the States. And so you really got to be at your best. So we've improved over the last 2 years, 10% on what we already know are the best delivery times.
Welcome back to NYC TV Live. Let's take a closer look at Boxable. This is the company behind foldable, affordable homes that are reshaping the future of housing. From disaster relief to affordable living, this startup is tackling the housing crisis with an innovative design.
Sustainable housing for all. That's the mission of Boxable. We are here in their factory in Las Vegas, Nevada, and we're going to speak to one of the co-founders and director of engineering, along with the CFO, about how they're revolutionizing the housing sector. Only on Taking Stock. Your factory is about 400,000 square feet.
Correct.
You're literally changing lives. You are revolutionizing the housing sector. But talk to me more from a financial standpoint, how you're going about doing that.
Right. I'm very happy that you managed to come because this is putting actually the reality on what we were speaking in New York. This is about advanced manufacturing. Advanced manufacturing is cost effective, it's about quality, and it's also about sustainability. How we're going to do that from the financial point of view? Clearly, behind the fundamentals of advanced manufacturing and transitioning the housing industry from building a house in months to building a house in days or in hours is how you're going to be doing the revolution that the industry is needing right now.
And production is really, it's actually scaled up right now. You're averaging about 2 houses, right? A day.
It's only with one shift, and the reason is because the permitting in US is very fragmented. It takes a lot of time in order to be approved to be a modular house. We're now approving Arizona, California, New Mexico, and that is the key. Our houses are built to building code. You can live safe in our houses, and that takes a long period in order to be approved. And we're right there now, and we're going to start raising capacity very soon in order to deliver our waiting list.
Kyle Denman is the Director of Engineering at Boxable, and he's also the co-founder. He explained the importance of having a product that can be sustainably mass-produced.
Nobody's really cracked a product that can be used anywhere. So the idea was to come up with a housing product that could be mass manufacturable. So you get the speed, the quality, the cost savings that come with mass manufacturing, and do it in a way where we can have a product that works everywhere. The current facility that we're standing in now is the main manufacturing facility. So about 180,000 square feet. It's got our assembly line down that way, building the actual houses themselves. It's got a pre-assembly line down here where we build the panels. It's our own panel for walls, floors, and roofs. And then we've just acquired 2 more buildings over the last couple of years.
And talk to me about what we saw today. We saw studio boxable houses, right? And then we also saw a few different variations of them. I mean, it's just a little sneak peek as to what's to come.
Yes, the whole concept was it's a building technology, right? So the casita, what a lot of people have seen, is a floor plan. It's an iteration intended for like the California EDU market, backyard modules. So now we're expanding into larger products, larger uses. So taking 2 or 3 of them, putting together to make single and 2 and 3 bedrooms, and serving the larger housing market.
Okay, amazing. Well, thank you so much for joining me today.
Absolutely, thank you.
I want to bring Trinity Chavez down there on the floor. Trinity, what did you think of these homes?
I mean, it was amazing being in my home city of Las Vegas. I mean, where their headquarters is, and it functions like a real traditional single-family home. Everything from the appliances to the plumbing to the materials that they use, and it's also very sustainable. It's a lower carbon footprint, eco-friendly materials. And I was actually surprised to find out, Kristen, that Elon Musk is one of the most notable celebrities to own this.
Elon Musk, one of the most notable celebrities. I'm not surprised. Of course, he's at the forefront. That's going to do it for NYSC TV Live.
I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital market here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a